Okay, folks, and we are live. Welcome to the special edition Sunday Night Futures Live, but it's Monday, obviously. Welcome, everyone. Franklin, hello. John, hello. Happy 4th of July to everybody. Hope everybody had a great weekend. I'm looking forward to getting back to work, new trading week. We have the markets the futures anyway, that were trading earlier today, abbreviated day in the futures market. Interesting price action, in particular oil. Oil, a big move up higher today. We're going to go to that chart in a moment. But first, we're going to scroll through the futures action. Then we're going to talk about something that is really puzzling to me, a conversation that is being had by not just the financial news media talking heads, but by certain people that I respect about whether we're seeing deflation or inflation. I'm going to address that. I'm going to give you my thoughts on it, and I'm going to show you some charts. We'll also take some stock chart requests. So first we'll go to members, then we'll go to super chats, and we will, of course, take, if time allows, requests from the audience. Hey, Jennifer. Jody, hello. All right, so let's get to it. And if I can ask you to please smash that like button, subscribe. It helps me out with the YouTube algorithm. Thank you very much. Okay, first up, we have the S&P 500. It is up slightly. Good 4-hour chart here. Nice consolidation. Nothing not to like or dislike. Sorry, nothing not to like. All right. Nothing not to like. So higher lows, we're consolidating nicely. And it appears as though the path of least resistance remains to the upside. You can see there was some selling of the S&P futures. This is a 15-minute chart now. Just prior to the futures market closing down at 1 p.m. Eastern Standard Time. But we're seeing a bounce back. Let's just set up an alert here. I want to see whether or not we take out this low, because you always want to pay attention to the closing price action. That's when the institutions go to work. Moving on to, let's go back to a 4-hour chart so we can get a feel for what we've been doing today. The NASDAQ 100. Very strong price action. The last time I looked this morning, we were below this lower band of support. Let's turn this red. But we appear to have salvaged. You know what? Not really. We closed down below. Let's turn this yellow so it's easier to see. We closed down below support. They're fighting at current to try and regain that support level, and they probably will, but it's worth just setting an alert here. Hey, Larry. Economist Nouriel Roubini has started using the word stagflation. That means higher. Yeah, and I think that that's exactly where we're going to go. I'm on the same page with him. I think that Peter Schiff has that same playbook as well. There are those that are differing, at least in the short term. Like Jim Rickards, who I'm a big fan of. He's in the deflationary camp at current, but I think that it's just a very brief period of time. We're waiting for two events to occur before we could say, okay, we're in a stagflationary environment. Right now, we have the economy that's reopening. They're saying they're adding new jobs. No, people are just going back to work. That's all it is. So let's face it. So we'll talk more about that in a moment. I always do that. God damn it. At or below. There we go. Okay. So our alert is set there. Let's just check out the 15-minute chart. See if we're struggling here at all. Let's move this up. Oh, won't let me. All right, won't let me. All right, so our alert's set. Let's take a quick peek at the Russell. It is up about 1/3 of a percentage point. That leads me to believe that we may be seeing some strength in the 10-year yield, weakness in bonds. That's just a hunch. Lackluster price action on the small caps over the past several days. We're seeing lower lows on the momentum indicators. Case in point, RSI, lower lows. Not that we've broken out, we're looking for validation, but you know, this is a pretty lethargic trade. But given that we've had a huge rally in the triple Qs of late, what they tend to like to do is, as yields begin to nibble or move back up higher, sector rotation out of tech, into small caps, into cyclicals. So we'll take a look at bonds now, as a matter of fact, to try to validate whether or not that's what's pushing the market at current. Because remember, we're seeing strength in the small caps this evening, up nearly 1/3 of a percentage point, yet on a 4-hour chart, the NASDAQ 100 broke down that last 4-hour bar. Granted, very, very thin volume today, but not insignificant. Where are bonds? Here we go. All right, so bonds are down slightly. That means yields are flat with a bias to the upside. So that allows us to understand why we're seeing such strength in the small caps. We may be getting some sector rotation fairly soon into those names. Now, I want to go to the US dollar for a moment. I hate that, sorry. US dollar down over 1/3 of a percentage point. RSI is clearly broken trend now, and it is very weak on a 4-hour time frame. So the question is, how does this wedge formation or triangle formation get resolved? With a bias or move to the downside, or do we break back out? $15-minute chart, I want to take a closer look here. Very thin trade. Not much volatility here. Back to the 4-hour chart. Create an alert. Now, keep this chart in mind because oil is priced in U.S. dollars. So if the dollar continues to weaken up here, oil's been going up with a strong U.S. dollar. Just imagine what happens to oil if the dollar breaks. Here's oil. A big, big move here on oil. Up over 1.5%. A bit overbought 15-minute time frame. We may get a pause here, but this is a powerful move. A powerful move. Now, taking a look at more commodities. Let's go to gold. Gold was up earlier in the day. What did GC. I typed in GS. Okay, that's why. All right, gold is up nearly a half percentage point. I'm not passionate about this price action here. We are in a bit of a trading range on gold. Potential inverted head and shoulders set up 4-hour time frame, left shoulder, head, right shoulder. We need a breakout. And I think that once we close above 1950 the ounce on gold, in all probability, we're going to new all-time highs in a heartbeat. So if the dollar continues to weaken up here, expect a big, big bid under gold. A quick peek at natural gas. Very strong. We've been bullish on natural gas. It is up 2% on the session. A major, major move. Silver up over 30 percentage points. So commodities thus far tonight, energy, precious metals, all looking very bullish. Yes, John, unless they extend it, the checks should end in September. In many of the Republican states, they've already ended the checks going out, forcing people back into the workforce. Continuing on, platinum up, wow, up over, or should say up nearly 1.33%. Nice move here on platinum. It's had a rough few weeks. Copper, industrial metal, it is up 1.5%. Palladium up over a percentage point. So the month of June was not favorable to commodities. Let's go to agriculture. Soybeans. Looking like we are consolidating. Still a rough chart. Looking for a breakout here. We are up over a third of a percentage point. So this trading session, excluding corn, is very, very favorable to the commodities trade. Rice, no action there. Wheat, we'll leave off with wheat. Wheat's still under a lot of pressure. All right, so let's go to Danny. Hey, Danny. Westlaw, nat gas as well. Well, I think also Westlaw is that natural gas is coming out of a multi-year bear market. We had a nice consolidation, and now we've broken out to new higher highs. Hey, Paul. JW, hello. All right, let's go to the topic of inflation or deflation. Before we do that, let's go over economic data coming out this week. Tomorrow, PMI services. Any read above 50 is a sign of expansion. Anything below 50 is a sign of contraction. ISM services, same deal here in terms of any number above 50 is a sign of expansion. July 7th, going to be interesting for job openings. We have a lot of job openings out there. However, you have small businesses competing against the federal government for wages. I'm going to go to a chart in a moment. FOMC minutes. This can move the markets, no doubt about it. Thursday, initial jobless claims. They're expecting 350,000 initial jobless claims. So, not a huge week in terms of economic data. I think that the Pimp Mac Daddy of them all for the week, FOMC minutes. Moving on to valuations. We do this every week. We're going into the new trading week with the Shiller PE ratio at highs not seen since 2001. And we are at 38.21. Now, we are going to have earnings coming out. It really begins the week after next. The big banks come out. And we'll see how those earnings are, whether or not they influence the Shiller PE ratio. Now, the Buffett indicator, I mean, is it nightmare proportions? We have to be at a third standard deviation a third standard deviation move beyond historical trend. They really need to update this chart. So, the Buffett indicator, strongly overvalued. Now, when we talk about inflation versus deflation, there's very few people that I listen to that I have any type of real respect for because they have a track record and they're consistent. They don't waver with the day-to-day price action of the markets. They're consistent. So I was listening to a bunch of interviews. Jim Rogers, one of my favorites, certainly a success story. Peter Schiff, they're in the inflation camp. They firmly believe that we are in an inflationary period. Any slight monthly decrease in CPI or a lack of a real true expansion of the CPI or PCE month over month, just a bump in the road. Whereas you have guys like Jim Rickards, who's got a huge track record, to a lesser extent, Mike Maloney, who I listen to, but not as much as I listen to Jim Rogers, Jim Rickards, and Peter Schiff. The one thing that they are all consistent with is that you must own silver and gold, despite the camp that you're in. And we're going to go through some charts. We'll show you why I believe that Jim Rickards believes that we're in a deflationary period, but ultimately we're going to end up in an inflationary period, and that's what he believes as well. But they're bullish on gold and silver, even though we might be in a deflationary period, because the Federal Reserve was given a gift. Remember, at one of their last meetings, they said that inflation is transitory, meaning it is temporary. So when you take a look at lumber on a daily chart, this is the gift that they were given, because they cited lumber as being a huge bubble and likely to pop. It wasn't going to last. this was a gift that the Federal Reserve was given. I don't necessarily believe that lumber is going to come screaming back higher, because what you've seen here was an anomaly where you had the country closed down, the city's on fire, people saying, I want out of here. They're looking in the suburbs. There wasn't enough inventory. So they said, you know what? Let's go out in the rural areas and let's just build. And that caused the demand for lumber, besides the fact you had hoarding by distributors, and then they dumped it on the market. So is this rally over? I don't know. It may be. I wouldn't be the least bit surprised if the move out of the cities and into the suburbs remains. Well, then, sure, you're going to see an increase in lumber. And let's not forget here one thing. This is very, very short-sighted, right? Because if you go back to a monthly chart and you take a look at a year-over-year view of, here is July of 2020. We closed out July at $528 per whatever for lumber. We closed last, and this is as of July the 1st, at $695.90. That is a 39.6, a 40% rise year over year. So despite this brief pullback that the Federal Reserve can point to and say, see, we were right. We told you this is transitory. They're not going to want to talk about the year over year, which is up roughly 40% year over year. So that's a fact. You have inflation in lumber. It's still here. Granted, we've taken some steam out of the engines of the lumber prices, but they can resume. Yeah, no doubt about it. No doubt about it, Westlaw. You know, if you take a look at a quarterly chart, the bull market in lumber is alive and well. You know, yeah, last quarter was a brutal sell-off, but let's face it, you take a look at this is a quarterly chart. You take a look at the price action, how far extended we are beyond the third standard deviation Bollinger Band. It didn't take a genius to know this was going to pop. It had to, because we weren't supposed to be here on a technical basis. And now we've pulled back. We have put in a new quarterly low, but we're holding support. So the bull market, yes, is in fact still higher, and lumber still looks good. So when you take a look at other commodity prices, I pulled up the Bloomberg Commodity Index, and when you take a look at it on a daily chart, this should be scary to the Federal Reserve, because remember, they were saying back here, inflation is transitory. Back here, it's transitory. Guess what? In the month of July, the Bloomberg Commodity Index has made new 52-week highs, and if you take a look at it on a quarterly time frame, this is a multi-year consolidation, and we have just broken out of it a couple of quarters ago. This is not a blip on the screen. This is not a brief breakout. The longer the consolidation, the greater the validation and the length of any rally. And this consolidation began back in 2016 and ultimately ended in January of this year. So the commodity bull run is alive and well. And when you take a look at any number of the inflation indicators out there, you take a look at the quarterly chart of the PCE. This is the Federal Reserve's favorite chart for inflation. Clearly, higher highs. Yes, during the COVID lockdown, we saw deflation, much as what we did right after the financial crisis, but then a resumption of inflation. Another chart, the CPI, Consumer Price Index. This is the core. So I backed out food and energy. I backed it out. I'm not going to play the game of keeping food inflation, keeping energy inflation, because if I showed you that chart, you lose your mind. Because the Federal Reserve likes to back that out of the CPI. Okay, I'll play that game. I'll play it. So let's take a look at the CPI. the CPI, yes, early 2020, we had a consolidation and a brief pullback. Now we're hockey sticking up on the CPI core. And when you take a look at what's driving inflation, if you don't want to pay attention to food and you don't want to pay attention to energy, okay, fine. Let's just talk about the federal government. You have businesses struggling to compete with the federal government to get workers. And you have wage inflation, which is just on a tear. And if you want to know periods of deflation going back in history, you've seen a ton more periods of deflation on the wage front versus what you've seen on core CPI. So now what you're seeing is wage inflation catch up with the CPI. And if you need a little bit more validation of that, take a look at private payrolls versus the wages they need to pay. They're ripping through the ceiling. This is not transitory. You're not going to be able to hire somebody and say, okay, I'm going to reduce your pay. You're not going to be able to attract new talent after reducing the wages you're willing to pay. It's now becoming an employee's marketplace. And adjusted for inflation, the minimum wage is still 40% lower than where it was in the late 60s. So this is probably only going to continue up higher. Now, we can argue that inflation is a bit sporadic. It's taken a pause in certain areas, certainly not in home prices, certainly not in wages, certainly not in rents. But fine. What's really going to send the signal home to everyone that inflation is going nowhere but up? Two things. One, this is a chart, a quarterly chart of the US dollar. We have been in a fairly broad trading range for several years, going back to October of 2014, where we broke out. And we rallied up to a high of 103.96 versus a basket of other currencies, with the euro being the primary currency against the US dollar, then the yen being the second place currency. And once we see the dollar break down below 89.15, or excuse me, 88.15, it's all over. And also, when you see the velocity of money, people don't talk about this that much, but we keep an eye on it. Because you can print a lot of money, but still not get heavy inflation, because you're not getting the transactions that you need to have hyperinflation, or not even hyperinflation. Let's not get hyperbolic. Let's just say heavy double-digit inflation. But once this velocity of money begins to pick up, and I would argue that we probably have a higher low here, and that we're probably going to hockey stick up and break out to new higher highs, then you're going to see inflation really become front page headline news. But right now, the velocity of money is very, very tame. We'll see whether or not this is in fact a higher low, and whether or not we do break out to a new higher high this quarter. So watch these two metrics, the US dollar and the velocity of money. If we get a breakout on the V2, M2 money supply, velocity of money, and a breakdown in the US dollar, then inflation is clearly here. It's not going anywhere. And that's when the Federal Reserve comes under a tremendous amount of pressure. They have to make a decision. Do they fight inflation, or do they allow it to run hot? And they've indicated that they will allow it to run hot for a period of time. So if you see inflation data come out hot and wonder why gold is dropping and the dollar is rallying, that's the market saying we're afraid that the Federal Reserve is going to taper. And when we had the jobs data, which came out the other day, it was like a Goldilocks number. Not much in terms of hyper growth in non-farm payrolls. So the markets were content with rallying, strong rally up, and gold took off as well. So that's my tale of woe when it comes down to the inflation argument. I would say this. We have some very, very good talent out there. Peter Schiff, Jim Rickards, Jim Rogers, great minds of economics. I think that we don't want to let anybody take parking space up in our heads. We want to look at the metrics. We want to look at the barometers of what's really going to indicate that inflation is not arguable any longer. And you'll know it again. Velocity of money and the U.S. dollar. Simple as that. This is what we're watching. And obviously we're watching gold overlaid here, which is clearly outperforming, or it trades inversely of the U.S. dollar. Let's do some chart requests. All right. I have Jennifer. Do you have Jennifer? I'm not sure what your issue is with our strategy. I booked profits on 50 contracts of naked covered calls on NUGT on Friday. So if you're talking about our Tues position, that short position, it's a very small segment of our portfolio. So I'm not a hyper bear on this market. So if you're of that opinion, I'm not. You're wrong. So I'm not going to address your question. All right, let's take a look at ATOS for Robert. Oh, we went over this one. All right, so Atosa Therapeutics, huge month in the month of June. We became overbought relative to the third standard deviation Bollinger Band. We got the inevitable pullback. Is the sell-off over? That's the big question, right? So what we want to do, and by the way, this segment is brought to you by TrendSpider, automated technical analysis, 35% discount code below. Take advantage of it. Weekly chart. A rough week last week. The next stop here, this is the automated trend lines. Click of a button. What we want to do is we want to set up an alert here. I'm not saying to buy at this level. In fact, I would caution that even if we hit it, we bounce for a day or two, wait until the end of business on Friday to see whether or not we hold that support level. And we want to know if we break through it. Okay, so what I also want to do is I want to overlay on top of the weekly chart monthly support levels as well, and if they're available, resistance levels, which I doubt. So we do have another support level below. I'm going to create an alert just in case weekly support doesn't hold. We do know that we have support on a monthly time frame down at let's call it $2.70 thereabouts, but this is declining, so that'll change. We'll keep some sensitivity on. And we'll keep this active for, let's go with 30 days. Touch, bounce, and we're good to go. On the right sidebar, we have the weekly and monthly support levels identified. Let's check in with, there appears to be a lot of data here. We'll go with seasonality. We can go as far back as 2012. July, very, very rough month. And it doesn't get much better until you really get to January. So seasonality, this is thin data, to be honest with you. Not favorable to ATOS this time of year. But again, it's thin data. So I wouldn't rely solely on the seasonality to make your decisions. Let's go to a daily chart. We're at daily support here. I'm not going to create an alert. Maybe here's the weekly support level, right? That's where you have the alert. I would wait for it to hit weekly support, because this is rough price action. Volume wasn't that bad at all. Okay. All right. Tried to help you guys 3 weeks ago, but some of you were just harsh on me, just like Bob was a few minutes ago. I'm not trying to be harsh. We have a strategy, Jennifer. It's just we're not going to add to a position that is not working out well. Yes, might we have to stop out? Yes, but if you take a look at the stochastics, if you take a look at the price action on the Qs, it's very, very extended. So why would I want to stop out of a trade where I would ideally like to be shorting if I didn't have a current position on? It doesn't make sense. It's an irrational trade to make to close out that trade when we should expect a pullback. On that pullback, if it's an orderly pullback, we're going to have to exit the trade. So you made a comment that we don't have a strategy. I put out the week ahead commentary to members this past Saturday, and I laid out the strategy just as I conveyed to you. So there is a strategy. So don't mean to get harsh, and if I was, I apologize. Okay. Paul X. Let's take a look. You know, that's a great chart to bring up, because it took a beating. Let's bring up a monthly chart first. All right, so I think the magic number here, I think we've gone over this one already, but it's worth repeating. The number to watch here on a closing time frame, use a daily chart, that works, 24.78 per share. So I'm not going to set the alert on a monthly time frame. We'll do a deeper dive. I'll do it on a weekly time frame. You can see how that resistance level has been rough to get through for the past 2 weeks, so it's worth the wait. Wait for the close above it. No sensitivity. And we'll keep this active for the next 10 trading days. We did, I guess it should be brought up, it's worth admitting, not admitting, it's worth stating that we did see a breakout last week on a weekly time frame above resistance, daily chart. we're consolidating gains. We will have resistance up here. Again, the value of the automated trend lines. Press a button. If you're looking for a price target, if we close above resistance when we get long, where would we be looking if we're going to scalp a trade to book profits? Right up here. Keep a little bit of sensitivity on. If you're holding it as an investment, don't worry about the resistance level. And we're good to go. So, X consolidating. You know what? I have no problem whatsoever with a opening position, small opening position, and then add more on the breakout above resistance. That's another way to handle that trade. So, X shaping up. Let's take a look at seasonality. We have a lot more than 12 years to go back, excuse me, a lot more than 9 years to go back to. Let's go back to January of 10. Let's get rid of this. Okay, July, a good month, not a great month, but a good month. We drop off in August, September, but then we pick back up. Strong months sequentially, October and November. So the bias, seasonality-wise, is to the upside for the month of July. Just be careful. August, it can get pretty ugly. What else we got here? Let's bring up the cues for Jennifer, and we'll talk about resistance levels. All right, so if I were to look to add to our trade to the short side, I wouldn't do it until we got up here. And I would argue that if you're not currently short of the cues and you're looking to short them, I would wait until this resistance level gets hit, because in all probability, you know, I do have a short position on. It's not huge. I do have one on. I'm not going to talk my book, though. The probability of the cues moving up higher, at least for the short term, is pretty good. We'll keep that active for a while. On a macro view, I think this is either a monthly or a weekly view. This expired. Let's not worry about this. So the cues look pretty good. Volume on the second was good. So again, in all probability, we're going up higher. The thing that we need to keep in mind, let's bring up the seasonality. We could use the weekly charts rather than just using monthly charts. We are here. So I believe that we are going into this week. It's one of the strongest weeks out of the year, but then it drops off dramatically the following week. And taking a look at the seasonality view from a monthly perspective, July is the strongest month of the year. So does it bother me that I have a short position going on into the strongest month of the year? Sure it does. But that's why we're not adding to it willy-nilly. I'm not getting excited about the trade and trying to rationalize it, because many people, when they add to their short positions that are losing trades, All they want to do is see that basis costs get reduced. That's like a feel-good pixie dust type way of trading. You're going to go broke doing that. Don't add to don't add to a short position that's losing and not at historical resistance level, or has not flashed some serious topping action and is at extreme overbought levels. To do that it's suicide. Don't do it. I would love to come on and speak my book and say, you got to short the Qs. I ain't going to do it. But I'm also not going to be a martyr and take a hit when I don't have to, because I know resistance is near. The Qs are overbought. Yields are picking up tonight. If yields go over 1.5%, I know what's going to happen to the Qs. They're going to drop like a bag of rocks. So that's a strategy. We're sticking to it. Maybe I'm wrong, but that's what trading's all about. Don't get too heavy in any one position. Yeah, the transports. What did I see a chart on the transports that struck me? Was it the quarterly chart? Yeah, it was the quarterly chart. So to John Spencer's question, what about the transports? So what I was going to go over tonight, but we're not going to have time. I wanted to talk about inflation and deflation. I was going to go over the quarterly charts. Maybe I'll save that for this coming Thursday, once we have a few more trading days left to go, or a few more trading days into the new quarter, because I always like to, in a new month, the first weekend, I like to take a look at the price action on certain indexes and say, okay, have we put in new monthly highs? The same holds true for a new quarter. I like to take a look and see whether or not within that first week, has the momentum continued into the new quarter? So I brought up the transports. I won't argue with your point, Westlaw, especially with we have big tech earnings coming out. They're not going to let big tech drop in front of earnings. The only caveat to that, if you see the 10-year yield rip up higher, then I would get heavier on the Qs. All right, so the Dow Transports quarterly time frame, very extended, and we saw a bit of a reversal bar last quarter. So this is kind of like topping action, where strong price action, but they faded it, just like they did back here in the April quarter of 1999, here, and then here in the April quarter of 2008. Volume has been still strong, but dropping off sequentially. So, by no stretch of the imagination, are the transports done going up higher? They may just be taking a break here for a while. Monthly chart. And here's your pullback in June. MACD histogram declining, so obviously losing momentum. Let's go to CLNE. Clean energy fuels. So you have a lot of resistance above. It's trying to break out. We did stop going down. We had a higher low last month versus the prior month. No new monthly high. Weekly chart. We had a breakout point failure here the week of June the 21st. We had broken out, but then we failed. Many times what happens here is that when you get a breakout point failure, meaning you break out, then fail to hold, and you drop back down into a trading range, it's also known as a bull trap. You get a retracement back down to the lower band of support of that trading range, and many times it fails. So just keep that in mind. This price action is pretty bearish. Now, it's no guarantee that it's going to retrace all the way back down there. So you want to identify where you have support levels that may hold. One of them is right here at this volume shelf, which lines up with the lows of January 2021. If it breaks that support level, then the next logical support level is the low of the trading range, and that's at around $8.20 per share. Daily chart. I mean, we broke out on Thursday. This may be a retest. Maybe you could argue that we closed down below support. You want to see whether or not this is able to pop up higher on Tuesday and find some momentum. Right now, it has no momentum, and it's got a lot of pressure on it, so I would avoid. CRISPR, it's one of Kathy Wood's favorites. JW, we're going to get to you. Oh, Jody asked for the same thing. You bet, Danny, anytime. All right, CRISPR is a major league. I guess it's you guys correct me. I believe it's a genomics play, and they kind of have a monopoly on whatever it is that they do. And their fundamentals. I looked into them. Their fundamentals are not great yet, but their outlook is pretty spectacular, and I believe they collect royalties. So on a monthly time frame, we're struggling at resistance. June was a stellar month. Weekly chart looking very strong here. Jody validated it. Yes, gene splicing. Yeah, it's a really hot market industry. So I'm looking at this very carefully as an addition to our portfolio, but our longer term portfolio. Basically, buy a few shares, forget it. And we had a beautiful week last week, but we were stopped at resistance. I had an alert that would fired off here as well. Let's get rid of this. So we gapped up higher last week, up and into not one resistance level, but two. And we failed to close above this resistance level here in blue. This is an automated trend line. I did not put that there. That's the algorithm. So what I'd be worried about and hoping for is a retracement back down to support. We'll keep some sensitivity on. We'll keep this active. I want more than that because I really like to pick up these shares. Touch, bounce, breakthrough. Are we good? No, not yet. Now we're good. All right, so our alert is set. I don't know how much data is here. Probably not much to talk about seasonality. It's a fairly new company. Yeah, it's not even worth talking about seasonality. Data's not thin. It's too thin. Now, what we may get here is just a continuation move up higher. I don't want any seasonality. Excuse me. No sensitivity. Can't speak tonight. And we're good. I'm going to set up another alert here. Okay, and we're going to keep this one active for 30 days. And we're good to go. You did see some selling last week into strength. Daily chart. I think we're good here where our alerts are set. The daily chart is implying that we had a strong day on the 30th. Orderly pullback, bottoming action here, implying that we have buyers below. We have our alert set on another pullback. We have our alert set on a breakout. CRISPR looking good. PACB. What time is it? It's 3 minutes to go. I'm going to make this the last one because I'm going to circle back to... Oh, no, I didn't do JW. I got to do JW. I promised. PACB monthly chart. Multi-month consolidation. Great month last month. This month, no new monthly high yet. Weekly chart. They faded it on the week last week. That implies they're going to do a retest of the breakout point. We'll keep some sensitivity on. And we're good to go. Daily chart. So here's our alert, ready to fire. I'd also want to know if we broke out. In fact, I like this volume shove. 35.18. No sensitivity. And we'll keep that active for the week. We're good to go. All right, let's circle back really quick. Oh, actually, PUBM. Keep forgetting about JW tonight. Not enough data on a monthly time frame to be of value. I don't like the price action on a weekly time frame. Big reversal bar last week. We're testing support. Ooh, interesting price action daily time frame. Again, the value of the automated trend line, folks. There you go. Click a button. So we closed right at daily support yesterday on the 2nd. I think this could be bought small position, tight stop. And if you're looking for a stop loss point, if we break the lows of, what is this low here? The 18th of June, you're going to want to be out. I would stay small. Then I would look to nibble, add more on a breakout above this resistance level. But remember, the daily chart's looking bullish, but the weekly chart bearish. So we still may get a little bit more testing of the support level. Don't be in any rush to go aggressively buying these shares. I want to circle back and take a look at the futures action, see how things settle down. I really want to focus on the bond market. None of my alerts fired off so far. Let's go to the bond market. And this is why. We've seen bonds improve a bit. That means the yield pressure has come off some. So I would imagine that we're seeing a bit of strength on the NASDAQ 100 names. Yes, now they're positive. At current, they're back above resistance. And we may have seen some pressure begin to build on the IWM. Not really, no, ultimately. We actually gained a couple of basis points. Let's take a look at the dollar. Dollar holding support. Let's take a look at gold. We'll leave it off there. Actually, I want to leave it off with oil and natural gas. Gold still flirting with a breakout. Oil. A little bit of a pullback here, but still up 1.46%. Natural gas. We'll leave it off with this. Wrong chart. Powerful. Very, very strong. Up 2.3%. Loving natural gas. Macro breakout. You got to love natural gas. You're welcome, Denny. All right, folks. Everybody have a great night. If I didn't get to your quotes, I'm sorry. I just don't have enough time. Become a member, and I do your chart requests. I go to you first. So join the Contrarian Trader. If you have any issues signing up, let me know, and we'll get you set up. Have a great night, a profitable trading week, and again, happy 4th of July, and be well.